Yo, what's up everybody? Thanks for joining me today. And today I'm continuing my Biden tax policies video mini-series and just kind of helping you be aware of the proposed changes that Joe Biden will have on the tax code should he become president, which it's looking more and more likely that he will. So my last video was about individual or personal taxes. This video will be about business and corporate taxes. And before we dive in there, I think I want to clarify some things with corporate taxes. And in order to do that, let's just jump over here. Okay, so in order to first understand corporate taxes, you got to understand the difference between pass-through entities and not. And so if you're a business owner, you may have one of these structures right here on the left. You have single-member LLCs, multi-member LLCs, partnerships, and S corporations. Now, the entities in blue will file their own tax return, while this single-member LLC entity will file its tax return on the individual Schedule C. So, although these entities right here file their own tax return, they do not pay taxes as an entity. So, what all these entities have in common is that they will flow, the income of these entities will flow to the personal tax return. And on that tax return is where you would pay taxes on the income of these businesses. And the taxes there will be calculated based on your tax bracket, your individual tax bracket, which I also explained in the previous video. The one entity you don't see on here is a C corporation. A C corporation is typically a larger company that sells stock. Most publicly traded companies are C corporations. Those entities pay their own taxes and they get their own corporate tax rate. So I'll talk about that here in a sec. All right, so Joe Biden is planning on increasing the corporate tax rate from 21% to 28%. Now, this might seem like a large jump, but it's really not, considering that the tax rate for corporations was at 35% before the Trump tax reform. So the Trump tax reform took it from 35% down to 21%, and that is a 40% reduction in corporate tax rates. Now, remember what I just said, that most publicly traded companies are C corporations, and C corporations usually only make sense for larger companies. Well, that means that the majority of the benefit here in the Trump tax reform went to larger companies. So I did a presentation one time that showed the Apple company's profits and the taxes they paid, before and after the tax reform, and it was like a $6 or $7 billion difference. $billion difference, okay, with a B. So that is a significant cut, and now Joe Biden is looking to just increase those taxes back up a little, not even to the full 35%. 35% was still pretty low in terms of corporate taxes. If you look here at the historical data of corporate taxes over the last 50 years, 35% was as low as it was over the past 50 years. You can see that it was up almost at 50% at one point. So it's just been going down and down since. The second major change that Biden is proposing is to impose a minimum tax on corporations with profits of $100 million or more. So the minimum tax works kind of like the individual alternative minimum tax, where it makes sure that everybody pays a certain amount of minimum tax if they're a wealthy individual. And the same thing goes here with high performing corporations or high profit corporations. They want to make sure they're paying a minimum tax to not use strategies to skirt taxes and stuff like that. Third major change is that he's planning on doubling the taxes on foreign earned income of U.S. subsidiaries, which means, this doesn't apply for many Americans. In fact, the last two major changes I just talked about don't apply to the majority of Americans. He's proposing to double the taxes of foreign earned income from U.S. subsidiaries. I think that's to help bring businesses back into the U.S. and to kind of promote that strategy. The fourth major change is going to be the manufacturing community's tax credit, and it's supposed to help businesses when they're going through a tough time. So if a business had to incur big layoffs, or the business had to shut down or temporarily close because of whatever reason, Biden is proposing a tax credit that will help that business by reducing their tax liability. The fifth major change he's proposing is expanding the new markets tax credit. Now, the new market tax credits is a credit that incentivizes investors and developers to invest money into low-income areas. So if you're not familiar with Denver, we had some, several years ago, we had low-income areas in neighborhoods known as 5 Points, or neighborhoods now known as the low-high area. 5 Points basically became Rhino, which is short for River North, and low-high stands for Lower Highlands. And now those two areas, those two neighborhoods are like booming like crazy. And that just shows how the new markets tax credit works. Developers and investors have participated in thousands of development projects because of this tax credit. And I think it's a good tax credit to help develop lower income areas, or maybe like forgotten areas that have been pushed aside over the years. So I think this could really help. Now, the downside of developing these areas is a lot of people I know in Denver, or a lot of tenants in those areas that were living there for a long time, they had to leave because their rents were increasing so much. So there's always like a shadow side to these things, So I think overall it's a good thing, but it could kind of force people out when they can't afford to live there anymore. So just something to consider there. Sixth major change would be adopting a tax credit that will incentivize employers to adopt retirement plans for their employees. And I think this is a great tax credit. I think this is a great incentive because, first of all, retirement plans are a great tool to defer your income. They will be a good tool to retaining your good employees. Employees care more about than just pay. They want to see benefits. They want to see retirement plan contributions. They like to see health insurance, dental insurance, all that stuff. So the more benefits you have, the bigger chance you'll have of getting and keeping good employees. And it's also a good way to diversify your portfolio if you have retirement accounts. And the last major change that I'm going to be talking about today is expanding the renewable energy tax credits, or any tax credits related to renewable energy. And as you know, right now, there are some related to like improving your home for energy efficient methods like solar panels or energy efficient HVAC system or doors or windows, that kind of thing. And at the moment, there's also credits for electric vehicles. $7,500 tax credit if you purchase an electric vehicle that meets the criteria. It's up to $7,500. It could be any amount lower than that too. But Tesla has been the first manufacturer to basically phase out that credit for the manufacturer, because they only allow a certain amount of cars to be manufactured in order to take advantage of that credit. And Tesla is the first ever electric vehicle manufacturer to completely phase out that credit. And so Biden is looking to expand any renewable energy related tax credits. And I think that's a positive thing. I think renewable energy is the future. It's the way that everybody's moving towards. Along with this change, he will also de-incentivize fossil fuels and basically take away any subsidies that are currently in place for fossil fuel manufacturers. Okay? So think about all these changes. Let me know in the comments below what you think about them. I'd love to know your opinion and your thoughts. And as always, subscribe to my channel, smash that like button. I really appreciate that. And take care for now and stay safe.
I'm in the mood for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a stick up. She picture perfect, so I told her